So, welcome back, everyone. I think during the course of our last class, we literally discussed about market mechanics, and we're more focused on the components of market mechanics. So we talk about the various, I think we made use of the PD array in discussing that, and talk about the rejection block and the fair value gap during our last class. Now, this class we'll be talking about the order block and the breaker block. It's not going to be anything much, though these are the two main ones that I use. But with that being said, let's get started. Let me share my screen. Okay. Oh, she's gonna share it. I think I've not even entered my listing for ever since the last class, so everything is still the same way it was during the last class. So let's get started. Now, today we're talking about order block and breaker block. What exactly is an order block? Now, an order block, just like the name goes, is a level in the market that there are a lot of orders. One particular type of order is being filled with higher volume. All right, that is an order block. I will come again. An order block is a level in the market where one particular type of order is being filled at an higher volume. What do I mean? One is a level in the market, basically another block is more or less you have a particular level. So that level we talk about to identify such a level. But before that, that particular level in the market is only one particular type of order that is being filled at that particular level with higher volume. Now, that does not mean that the other type of order won't be filled with higher, won't be filled at that particular place. Just that one particular type of order, we have more power over the other one. What am I trying to say? Take for instance, when we talk about orders, we have two types of orders. We have the buy orders and we have the what? We have the sell orders. All right. So from a particular level, there will either be buy at any given point in time, there will either be a buyer and there will be a seller. All right. There must be a buyer and a seller for the market to move. If there's only buyers, forget our market is not going to move. If there's only sellers, same thing as well. All right. So the two of them need to be balanced for market to move. All right. So with that being said, now when we talk about order block, we're basically talking about a particular level in the market. If one particular type of order is being filled at an higher volume. So with this being said, I'm simply talking about, take for instance, a particular level where buy orders are being filled at an higher volume. Now, what is volume? Volume is just basically the total value of the orders that is being filled. All right, let me just use that statement. More or less talking about the total money, the total amount of orders that is being filled in the market. Now, not just amounts of orders, they are the monetary value that particular orders hold. That one will determine the volume of that particular market or at that period of time. All right. So with that being said, when we're talking about the volume of buy orders, we're basically talking about the total number of buy orders, the amount. Now, volume makes use of two things, all right? The amount of money they are using to feed those orders and the amount of orders. Now, these two things that I mentioned them based on which one have more, based on purity. That means the first one, which is the amount of money, is the first one that determines it first before the amount of orders. When I say the amount of orders, I'm simply talking about how many people are placing orders at that particular point in time. Now, there might be over 100 people placing orders at that particular point in time. All right, make another market, let there be only 10 people placing order, but those 10 people, their volume will be much more higher than the other people. That's why this one is the second one. That's why I said that we use the first one, all right, in describing what volume actually entails, which is the total, like the monetary worth or the monetary value of that particular order. In the sense that these 10 people, they can decide to fill in their orders with how much? Let me say $10 billion each. While these 100 people might decide to fill in their order with $1,000. When you compare it, even the 100 of them combined together, they are not even up to one of these 10 persons. So you can see now that it does not even matter how many the total number of market participants. What actually matters right now is the amount of money that they are using to do what? To fill in those their orders. Now, when they're using massive money to fill in their orders, that's where we say that, okay, there's a larger volume at this particular place in the market. All right. Now, with that being said, let's go back to the meaning of the order block. Like I said, it's basically a place in the market, a level in the market, where one particular type of order is being fed at an higher volume. With that being said, in the case of a buy order, I'm trying to say that, okay, this particular level in the market, buy orders are being fed here with, like, they use buyers, they enter the market very much. They buy well for this particular place. They're using a lot of money to do or to enter the market at this particular level more than the sellers. Perhaps at that particular level, the total volume, 95% of it goes to buyers, while just 5% of it actually goes to what? To sellers. That's to show you that the buyers have the full majority of this particular level. Now, vice versa go for the other case if it's in the case of the sellers having the majority. All right. So this is what I mean by just one particular type of order is being fed at an higher volume. In which the other side, you most likely see that, but just like say those people are not even in the market. All right. So this is what an order block actually entails. It's just a particular level in the market where one particular type of order is being fed at an higher volume. Now, with that said, how do we identify this particular order block? Because the essence of us talking about order block is basically so that we can identify them and use it to trade alongside with the smart money guys. Now, if you notice, out of all my explanation for all the components of market mechanics, it's only order block that have a well-defined SMC explanation. The rest of them will not tell you this particular, that like will not give you this particular information you're looking for. All right, please pay attention. This is the reason why I use the order block. The order block is the one that entails that tells you more about the smart money guys. Because what another block is trying to tell now is that it should be a large volume. And you can only see large volume when smart money guys are involved. All right, you can only see your what? Your large volume when smart money guys are what? They are involved, they are in that market. That's when you do what? You will see your large volume in the market. All right, this is why I say that this other block is the one that fits more better when it comes to smart money concept. Now, based on S&D, which is supply and demand concept, we have two types of order block. The first one being the demand zone, and the second one being the supply zone. The demand zone is the order block that we find at the discount zone. That means in your lows then. All right, in your lows is the this thing that we find there, the demand zone. Right? In your eyes, the one you will find there is your what? Is your supply zone. All right. Now, all these ones have been given different names and all that. Take, for instance, the demand zone can be called the bullish order block or the demand block. many other names as well. Even so many I not even do it. I don't even remember. The supplies can be either can also be called the bearish order block or the supply block. All right, so that's for that. So the identification is basically nothing much. One of the main criteria of identifying your order block is that it should have a fair value gap, and it should be the last opposite candle. Remember, the last opposite candle. What I mean to say is that the last candle of the opposite trend. So let's take for instance. Behave now. Let's take for instance, we have a downward trend of a thing. All right, and now at this particular spot, market push to the upside. All right, the market pulled back down. Market is coming down now. All right, so now as market is coming down, there will be a particular level in the market will have to reverse. And in this case, let's say market want to use the other block, for example. So how do we now identify the other block at in this particular level? Now, these are the criteria in picking out another block. All right, just a little bit based on the identification, not based on what validates it. There's difference between identification and validation. Validation is what makes another block strong. Identification is what says you that okay, this is another block. After you identify the other block, before you then talk about the validation, and that's what we are going to be dealing with when we go to advanced market structure, advanced market mechanics. I mean to say, because we have to deal with liquidity first of all before we start talking about what actually validates other blocks, because you will need that liquidity since it is one of the criteria in validating an order block. So for now, we'll just be talking about the criteria for identifying an order block. So an order block is found at the point of rejections in the market. Remember, we have 2 points of rejections. We have the low and we have the what? And we also have the high. So each of all these 2 places, that's where we find your order block. In which the one that is found on the low, just like we said, is the what? Is the bearish, is the bullish order block, which is the demand zone. All right, because when price come here, you are expecting price to do what? To reject this particular level and what? And push to the upside. Why? Because this is a point of rejection. And since you have seen your order block there is a possibility that your smart money guys will do what? We enter the market around this particular level. All right. Now the opposite goes for your for the case of the high, which is the other point of rejection, the high. Now in the high, the other block you want to see there is your watch, is your supply order block, because you expect that once price push down, price will come back here. And if your smart money guys want to enter the market from this particular level to push the price, to push the market downward, it simply means that it is that most likely that area where that supply zone is, that's where you most likely want to do what? To take your trade from. All right. So with that being said, this is one of the criteria in identifying your order block. All right. So like I said, the first criteria, please note this down. Note this down, like in whatever writing material you're using. The first criteria is that the order block are found in the points of rejections in the market, be it the highs and what and the lows. That's where you will find your what? Your order block. Now, the second criteria is that is the last candle of the opposite trend. Take for instance, how the market gave us this particular low. Market was in a downtrend before pushing to give us an uptrend. Downtrend, uptrend. So now this uptrend is the most recent one. All right. Until market break below this particular low, market is still in a what? It's still in an uptrend. So now, at this particular, since this is an uptrend, this particular move is an uptrend, simply means that the opposite trend on this particular uptrend is the what? Is the downtrend. That means the supply trend. And Tell me, which candle is associated with a supply trend? It is the what? It is the bear candle, which is the red candle. In my case, it is the what? It is the blue candle in my case. All right. So, with this being said, with that said, you want to identify your demand zone from the last red candle. All right. You want to identify your demand zone from the last what? Red candle. Now, that is the now for the supply trend of it, for the supply block of it, not the supply zone. You want to identify your supply zone from the what? From the last green candle. In my case, is the white candle. So you want to identify your supply zone because a supply zone, take for instance, something like this. Now, with this, you can say that this was the last trend, which was a demand trend. A demand trend gave us this what this high here. You can see demand trend gave us this high here, and then what proceeded after it was a supply trend. Now, with that being said, what is the opposite trend of this supply trend? Is a demand trend. Which candle is associated with the demand trend? Is the bull candle. That simply means that the what? The red, the green candle. And that is why we identify our supply zone from the what? From the green candle. In my case, which is the white candle. So this is one of the criteria for the second criteria for doing what? For identifying your order block. Now, the market structure criteria for identifying your order block is that it must give you a break of structure or a market structure shift. All right. The order block, like that particular place, point of rejection of a thing, like after price rejects this particular level, pushing back, it should give you a what? A break of structure or a market structure shift before you can then go on and start identifying your order block. You want to see your what? Your break of structure or your market structure shift to show that yes, you are in line with the trend of the market. So you want to see your break of structure, your market structure shift. First of all, before moving on to that, identify your order block. All right. So this is not just only one of the criteria that for identifying an order block. It is also one of the criteria for what? For validating an order block as well. You want to see your break of structure or your market structure shift, first of all. Now, the last criteria you want to look into is the presence of an impulsive move. All right, there should be the presence of an impulsive move. That's when we then tell you that okay, smart money guys have used this particular level before. Remember, we are training the smart money concepts, all right? And since we are training the smart money concepts, when you have something like that, that will tell you that smart money guys have used this particular level before. And since they have used it before, as price is coming back, they will most likely want to use that particular level again, the origin of that particular impulsive move. And that particular origin of that impulsive move is what we call, is what we classify, is that particular level that we tend call the order block. Because the origin of any impulsive move will be the candle of the opposite trend. Take for instance, no, I will tell you guys what an impulsive move is all about. But before that, let me just explain this. Take for instance, this is an impulsive move. All right, you can see the presence of your fair value gap. So now, this is the last candle of the opposite trend before this impulsive move. Now, this particular candle will then be termed to be the origin of the what? Of the impulsive move. And since it is the origin of the impulsive move, it is also to what? The other block. In this case, the supply zone. All right. So this is what I'm trying to explain. All right. Now let's talk about impulsive move. What exactly is impulsive move? Anytime, because we've been hearing about impulsive move over and over again. Now, an impulsive move is a sharp move in price. I think we've already talked about impulsive when we're talking about market structure, but regardless, we'll still talk about it here again and a more defined way of what an impulsive move is all about. So, like I said, an impulsive move is a what? Is a sharp move in price, showing that there's a showing that one particular one particular order was filled at an higher volume. That's what an impulsive move is trying to tell you. It's trying to tell you that, okay, at this particular level, there were a lot of sellers. Not just only were there a lot of sellers, but sellers entered the market with big money. That can only happen when smart money guys are positioned in this particular area. So it is the smart money guys that actually push price sharply to the downside because they use big money to do it to enter the market. Or rather, since this for a sell, they remove big money from the markets. This is the crypto market, the fat coin. So simply means that one institution or one whale sold off its fat coins. So some part of the fat coin or majority of the fat coin. That's why we see this sharp move this particular day. That was on Friday 10th of October. I don't know if you guys remember. I remember that was one of the days that market fell massively. For those of you that were during the one of my class, that was an SMC 5th batch. If you remember fully well, we were live on class that day when this thing happened that drove BTC from was it not 120,000 to 100K? I mean 103,000 in an instant. Even before we right under our eyes, live in that shot, that's in the apple. So that's for that, Sha. So with that being said, this is what an impulsive move is all about. Now, how can we spot impulsive moves in the market? You can spot impulsive move by three ways. The first and most common one is, or rather, the first one you want to see, that means the most simple one, is an engulf candlestick pattern. For those of you that study candlestick pattern, you should know this very well. An engulf candlestick, that is the first thing that we say that this is an impulsive move. Take for instance, please excuse me. Sorry about that. Take for instance, you can see that this particular candle, this middle candle here, it did what? It engulfed. Now, for a candle to engulf simply means that the candle has to take out the previous candle entirely. All right. Take for instance, you can see this particular one. This was this previous candle. See where the previous candle end. By this next candle, take them out entirely, push to the downside. This is an example of an engulf candlestick. Even this particular candle here, this one engulf this previous white candle. This blue candle here, it engulfed the previous white candle. All right. We want to see that this candle closes below, in the case of a downtrend, all right, we want to see that it closes below the previous candle low. And in the case of an uptrend, we want to see that it closes above. Take for instance, this one is an engulf candlestick. This one, it closed above the high of the previous candle. So this white candle actually engulfed this blue candle here. All right. So this is one of the indication of an impulsive move. Now, the second indication is your fair value gap. You already know how to identify fair value gap, so I don't really have to come and start explaining fair value gap here again. Your fair value gap is the second indication of a what? Of an impulsive move. Take for instance, in this case, you can see your fair value gap here. This was the old fair value gap that this particular push to the downside caused in the daily time frame. So this is the second indication of an impulsive move. All right. Now the third indication is consecutive candles formation, in which candle of the same color over 3, 5, 6. Take for instance, this is what I mean. One, you can see this one. I'm coming. 1, 2, 3, 4, 5. We have 5 blue candle here. This is an impulsive move and as well. And as you can see, you can also see your fair value gap here. You can even see your engulf candlestick here as well. And that's why when price came back, it did what? It was able to use this particular order flow here to do what? To push the market downward. In which case, you use this breakout block here. In which, if you go over to the lower time frame, most likely see your order block at this particular level. You can see your fair value gap, a little fair value gap here that price actually came back to fill before pushing to the downside. All right, so that's for that. Please excuse me. It's not looking good this night. So that's for that. So this is the criteria you want to see for a particular move in the market to be called an impulsive move. First of all, which is the most basic one and the least is the least one that is likely to hold. The one that is most likely strong is the consecutive candle of the same color forming over and over again, at least 5. All right. Now the second most strongest one is the fair value gap, and the third most strongest one is the engulf candlestick. Based on how strong they are, that's how I gave it to you guys. So now when the three of them appear together, that's a killer. Whatever point of interest is there is going to kill the market. Take for instance, after price came back to this particular level, what happened? You can see the sharp move, fiam to the downside, pushing market downward to this particular level. This over. Oh God, only God knows how many people stay here. So that's for that, Sha. So this is your criteria for identifying your impulsive move. And this, like I said, this is another block here, in which case this is supply zone. So moving on, let's go identify various I don't know if you guys remember during the last class, I told you guys that price have reacted from this fair value gap, and there's a it's likely to come and give us a break above this particular level, which they have done. First of all, is sweep arm, and now it's coming back again. Most likely, it's going to come to this particular rejection block here or this one here before doing what? Before pushing to the downside to come and take out this particular place. So there's a likelihood that price will do something like this. Please excuse me. So this is what I'm expecting my first scenario, and I think I'm having a little bit of network issues here. It's just a moment I'm coming. My network is still not strong. All right. Mark. So this is the two scenario I'm actually expecting for this fat coin. So now let's go back to identifying our listing of it. And now over here, you can see the supply zone here. The reason why I'm only identifying supply zone is because this particular market is in the what is in the downtrend. All right. So since the downtrend is only supply zone that that you should be expected to do what to actually push the market downward. You can see your supply zone here. Since this is the daily time frame, I got a supply zone of the lower time frame up above. Now you just need to take the body, all right, the body of the candle. I'm kind of a little bit of already. That's why my distance is I won't be able to identify it properly for you guys. But just the body. Depend on how the candle form. You can decide to take the body. I can decide just only the body. I can decide to take both the body and the work and the week. Any one of them. Now this is the bad zone but fit to because market is in the downtrend. You can hardly see a demand zone holding at this point in time in crypto markets. This one market actually used to weak, perhaps in lower time frame, most likely see your perfect order block there that market actually use. But all those ones we talk about there when we're dealing with advanced market structure. So that's for that. Over to the one time frame, you see your order block there that price actually used. This is a perfect demand zone, but since market is in that trend, it fits to hold. Because you expect market to form lower low. You don't expect market to come and start giving you um come and start respecting demand zones where it's supposed to take out that particular low that demand zone is on to give you a lower low. Take for instance now, take yeah, this is a perfect one. This is a perfect demand zone. So please just remember the criteria and that's all you actually need, right? So this is all we have regarding regarding the other block of a 10. And I think we end to this class here with just other block. Now, what how do we classify validate our other block. How do we make use of the other block? This is how we make use of the other block. Identify your other block, you place your entry on it. With your stop loss stress, stay below that swing low. And your TP, well, you get to understand where you should place your TP after. But this is what you should be expecting from another block. All right. Now we most likely want to go back to the lower time to go and show you guys how these things actually work so that we will see some practical example. Okay, let me see if that we'll be able to use the 50-minute time frame. Probably better. This over here I can fully explain everything you need to know regarding the other block. Over here is another block, and that was why price reacted from here, push upward, and then that's a sharper ratio 5. Too many advanced other block here. No more stress on that too much. All right, these are the supply zone. I make use of the white candle, right? Perfect one ratio 4. So this is how you should make use of your other block. Well, you can see by this already, it gave me a break of structure to the downside. Then over here, you can see a engulf candlestick. In this case, these are the engulf candlestick. It engulfed the white candle. All right, that's your indication of the impulsive move. But this one, the impulsive move was also that sharp. Eh. So let's keep going as we keep on looking for some this thing. All right, over here as well, you can see this one. And the possible that price used, you can see it very clearly here. There's a fair value gap at that particular spot. What's happening now? Then you can see your break of structure here. So you have your break of structure, you have your fair value gap alongside. And then you have the last candle before the impulsive move to the downside, which I later use as my other block. So this is basically how you can actually look for all this stuff in the market, right? It's nothing much, nothing complex, just as easy as that. I want to see if I can get a top position, but this particular market is in a downtrend. See this one over here. This is a sharp move for this one here. In the lower time frame, most likely see your other block here. For the 5 minute time frame, see your other block here. So say I enter this chart quick for cash this particular trade. So that will be all for today's thing. Let me see if I can see any other one again. Alright, you can see your other block here as well. But price actually took it out before push it to the upside. Regardless, another block is another block. Alright, that's a sharp one. It's a sharp other block. So that will literally be all for today's class. That's what you need to know regarding other block. Now, during our advanced class, we will talk about how to validate your other block. For now, this my network not gonna allow me to do this clearly, so let's just move over to questions. Any question?
No.
It's all
Okay.
clear, Abi?
Good evening.
Yeah, good
Good
evening,
evening,
Chef.
Oga says yeah.
You said?
Today's class get as CB, but nevertheless, we are able to capture some certain things.
Oh,
Apart
alright. When you
from
go through the recording again, you will get it clearly.
yeah, apart from the two other blocks, like the criterias for the other block, I think I captured only two, which was other block after a fair value gap and other block after a sharp impulsive move to the upside or to the downside. Is there any other criteria for picking another block apart from these two?
When you go through the video again, you will get everything clearly.
Okay, fine.
Okay.
Secondly, when we identify two fair value gap on an impulsive move, upside or downside, how do we know which other block? Sorry, which fair value gap that the market is to respect before changing direction? Is it the one at the up or the one at the down when the impulsive move is on the downside? Are you getting my point?
For fair value gap, like the two fair value gap, are you talking about two bullish fair value gap in the case of a bullish scenario?
I'm talking about
A bearish
a
fair value gap
bearish.
and a bullish fair value gap.
Yes.
It depends on the trend of the market. I told you guys this same thing when we're talking about fair value gap, that the trend of the market matters. If market is in a downtrend, you should be focusing more on the bearish fair value gap, nothing concerned with the bullish fair value gap. You don't need the bullish fair value gap because you are not looking for buy, you're looking for sell. Since market is already in a downtrend, so
Yes,
that bullish fair
that
value
is
gap
what
there
I'm
is none of your interest.
okay. I was talking about when the fair value gap is two, like the one at the top side and the one at the downside on a
And
down
that's the first
impulsive
period
move.
I gave you that two bullish fair value gap or two bearish fair value gap.
Okay.
Now, in such case, you just need to know that there's fair value gap there. Those two fair value gap is more or less telling you that okay, this is an impulsive move. All right. Now, look for the opposite candle. Just because there are two fair value gap does not mean that there will be two opposite candle. Take for instance, I think the scenario that I gave to you guys, there was two fair value gap, and there was just one opposite candle. That was where I drew my supply zone from. If there was another one, price would have used that one to do what? to push to the downside, but there was no other one.
Okay.
Regardless, price
Okay.
did not get to my point of interest, right? That means my other block. The price got to that place? No. Why? Because there was another this thing, another component of market mechanics that is there, which is the breaker block that price used in pushing to the downside after taking out the first fair value gap, which I already explained during the call, during the this
Okay.
thing, where I will show you guys about it.
Okay. Okay, sir. Thank you very much.
All right.
I get
I
it
hope
now.
that clears your question, Abe.
Yeah. Yeah.
All right. So, anyone have any other question regarding this class?
No question, sir.
All right. Absent of no question, we call it a day then. I will look for a way to get all the videos uploaded. I know that I was having a little bit of a lot of activities recently. That's why I have not been that active to post them, but I will try my best eventually and get all the videos posted for you guys. All right then. Good night, everyone. Remember, do your work is there. Don't wait for me to tell you how do your work is. Thank you very much.